I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume, it's total panic in the streets, and always a great buying opportunity. You know, this is nothing new in the story of leverage. And so in every cycle, what happens is various actors, companies, take on more and more aggressive positions using leverage to goose returns, which is age-old. It works. It definitely works. Now, what you're going to find in this situation is many crypto operators, particularly lending platforms, have never operated it with such volatility before. So they were in the slow growth from Bitcoin, you know, almost a decade ago, from $800 all the way to $60,000. And all along the way, some of them became really aggressive in using leverage, which is the traditional hedge fund model. Now, what happens, and this happens in equities, it happens in bonds, it happens in real estate, it happens in crypto. Crypto's the Johnny-come-lately new asset class with a whole lot of newbies in it. You're going to see a whole series of these actors get crushed to zero over the next few months. In the contagion of leverage being caught offside with the lack of liquidity here. But the great news about this and why this is so good for the market and how this helps the crypto market is it educates the business models that aren't going to work. So it's like taking a big spatula from the sky and scraping all the crap out of the market. And it's going to happen very, very quickly. So anything that was built on a business model that is not going to work or can't sustain volatility is going to be gone, and it's a good thing. It's a wonderful thing. It's going to leave the industry much stronger. Yes, we must mourn the investors that got wiped out to zero, but even they are better off in the sense that they've been educated. Well, let's talk about that specifically, because I think it's a great topic, and for several reasons. Reason number one is people think that crypto, the entire sector, is going to get regulated all at once. That's not going to happen. The most likely scenario, and this is a personal opinion, but one I've been working on in Washington, along with others, is that we would like to get policy on just stablecoins first, because stablecoins represent a very powerful and efficient payment system. And we think we can get bipartisan support between both parties supporting the American dollar as a default currency for a global payment system. It's not going to be the Chinese yuan, it's not going to be the Swiss franc, it's not going to be the euro, it's not going to be the British pound. And the reason it would fall and default to the US dollar would be that that is the currency used to denominate most commodities. And so the challenge you have right now, and why there's so much pressure to solve this, is it's very inefficient to transfer US dollars over to Geneva, then put it into Swiss francs, and then buy Swiss Nestle stock or whatever it is you want to do over there. It's really slow, very inefficient, very costly, not transparent, and not easy to audit. And so all of that problem goes away with a stablecoin. What I'd like to see happen here is that we regulate stablecoins first because of their utilitarian value within the crypto universe, and that get done in this calendar year. And the reason that might happen is Toomey is retiring, and he is a driving force, as you know, on the Hill, and is really behind this momentum and this bill, and has lots of support from both sides of the aisle. So I think that's good. Now, obviously, what happened to Luna is an example of what not to do. So again, a sad situation, billions lost, but a great education to the market. Algorithm-based stablecoins, nah, I don't think we're going to do that again. I'd rather see something backed by US dollar or assets that are very liquid, that can have duration of less than 12 months. So that makes sense to me. So at the end of the day, the bad ideas get, removed by the big spatula. And again, it's unfortunate for those investors that didn't think it through, but not all stable coins are alike, USDC being the leader currently. Now, having said that, if you go look at current yields across the spectrum of duration from 1 month to 12 months, it's only 50 basis points right now. So right now, USDC, while it hasn't broken $1, is not a great place to park cash, because you can do 1.2% in commercial money market accounts in US dollars. So at any one time, you have to manage assets as you always had to. I don't believe we've seen the bottom yet, and I have a different view of it. I go back again to other asset classes that I've invested in for decades. In every case, traditional bonds, traditional equities, real estate, alternative asset classes, bottoms are reached with an event, a panic event, as I call it. And you can find it in every asset class. Back in the hedge fund days when they started gating, these large multi-billion-dollar hedge funds that gated, shut down their liquidity, caused panic, and you saw bottoms in equities as they were being liquidated. There's long-term was one of the classics in the last couple of decades. And it was a fund that was over-levered and blew up. We haven't seen that yet in crypto land. There's no big guy has gone to zero yet, and I think that's still to come. Hard to say who it is because it's going to be because of leverage and some kind of relationship in a counterparty holding that they have not disclosed. And I'm just speculating right now, but that would be very healthy for the market to have that happen. Voyager's too small, it doesn't matter. The rest of these guys were kind of irrelevant in terms of total market cap. Bitcoin and the crypto market itself has almost been cut in half in total market cap. And so you would think we're on our way to the bottom, but I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume, it's total panic in the streets, and always a great buying opportunity. But it's coming to a theater near you, and it will definitely be a very good thing for this industry. It'll be a great thing because it'll take out all of the bad, broken business models, the heavy leverage, the speculation that was too risky, and push everybody, and this kind of circles back to the conversation you were having with Ben at WonderFi. The reason I'm an investor in WonderFi is I need a place to store my crypto assets that fit into my compliance and accounting departments. And so, when WonderFi was able to offer me a centralized wallet at BitBuy, I was able to say to my auditors, look, you can audit this thing daily, weekly, quarterly, monthly, and I can mark to market each position for you at 4 o'clock, even though it's irrelevant in crypto land, it trades 24/7. But the old infrastructure of compliance that exists for all financial markets has not yet provided systems yet for anybody that wants to be compliant like I have to be. It's taken me a long time to convince my existing compliance and accounting infrastructure that supports my operating company's investments across a wide range of financial services to get on board with my positions in crypto. Because remember, I own WonderFi because I want to own infrastructure equity. Same for FTX, same for Circle. I'm a shareholder of those companies and Immutable Holdings in the NFT space. That's my basket of equities that are all compliant operations. They're all compliant. They all work under very strict compliance. That's the test that starts the equity investment. But the more interesting challenge that I solved recently with WonderFi again, with BitBuy, was to actually open an account, transfer all of my projects, whether it was a Polygon or Helium or whatever. I mean, all this stuff to me, these are not coins, it's just software, that's all it is. And moved it into, and slowly I'm doing this, I'm not finished yet, into BitBuy, where I can get a statement each month that my auditor gets before I do, and my compliance department marks to market every day at 4 o'clock. And I find it so humorous that the whole compliance world still marks to market crypto at 4:01 p.m. as if that means anything. I think crypto has a very bright future. I'll be bold enough to say in this very volatile market for crypto that within a decade it'll be the 12th sector of the S&P. And the reason is there's just too much productivity, too much transparency, really strong vehicles for solving financial services problems that exist today, like transferring capital, as I talked about earlier. It's just too good and too efficient. And so it'll remain. The key is we need to get some policy. I think it'll happen first with stable coins. And you asked a question about the stock market. It's no different than the crypto market. The stock market is still a little expensive if you believe we're having a recession, probably fairly valued if you think we're having a soft landing. The trouble is nobody knows. So you're going to see this fibrillation going back and forth until we resolve that question and we know where the Fed stands in further rate hikes. But there are some great companies that have lost 20, 30, 40% of their value. And I have to admit, I'm nibbling in equities as well, just as I am in crypto. And so I can't call the bottom, but I don't use leverage. That's the secret sauce. Everybody's calling me up, want to lend me money. And I just say, no, Nanette, not interested.